We're covering these 6 top stocks with big percentage moves today. While watching bullish price actions, let us inform you our review on SUNE. SUNation Energy Incorporated, formerly Pineapple Energy Incorporated, has strengthened its financial position with the full repayment of $9.4 million in senior and junior secured debt, well ahead of the original maturity dates ranging from July 2025 to June 2027. This strategic move reduces financial risk, enhances the company's balance sheet, and demonstrates strong cash flow management, signaling a disciplined approach to capital allocation. For investors, the early debt repayment reflects SUNation's improving financial health and commitment to long-term stability. By eliminating these obligations, the company lowers its interest expenses, directly improving profitability while increasing financial flexibility for growth initiatives. Given the capital-intensive nature of the solar and battery storage industry, maintaining a strong balance sheet is essential for expansion. SUNation's ability to retire debt early suggests effective revenue generation or access to alternative financing, reinforcing investor confidence. This move positions SUNation favorably within the competitive renewable energy sector, where financial resilience is a key advantage. With industry challenges such as inflationary pressures, supply chain constraints, and evolving regulations, reducing financial leverage enables the company to remain agile and invest in scaling its operations. The additional financial flexibility could support further expansion of solar and battery storage solutions, advancements in its e-gear energy management technology, and potential market acquisitions. A stronger balance sheet may also help secure future financing on better terms. From a shareholder perspective, this debt reduction has meaningful implications for long-term value creation. Lower financial obligations can improve earnings per share, EPS, enhance profitability, and potentially drive stock performance. The move underscores management's strategic discipline, focusing on sustainable growth rather than reliance on leverage. While this is a positive development, investors should continue monitoring revenue trends, profitability, and operational execution to assess its broader impact on stock performance. Overall, SUNation Energy's proactive debt repayment reinforces its financial strength and strategic vision. By reducing liabilities and freeing up capital for future investment, the company is well-positioned to capitalize on growth opportunities in the renewable energy sector. Investors will be watching closely to see how this improved financial flexibility translates into expanded market presence, increased profitability, and long-term shareholder returns. Our review on PRPL, Purple Innovation Incorporated, a mattress company specializing in branded and premium comfort products, has provided its 2025 financial outlook, signaling mixed performance. The company projects full-year revenue between $465 million and $485 million, below analyst estimates of $497.27 million, while expecting adjusted EBITDA between flat and $10 million, reflecting efforts to stabilize profitability and improve operational efficiency. For Q1, revenue is expected between $102 million and $107 million, compared to a $117.12 million estimate, with adjusted EBITDA ranging from a loss of $6 million to $9 million. While the revenue shortfall suggests softer consumer demand or increased competition, the company anticipates sequential improvement throughout the year as cost-saving initiatives and strategic adjustments take effect. Management remains optimistic that these efforts will drive long-term growth despite near-term pressures. Q4 results were mixed, with $0.07 per share loss beating expectations of $0.14, but revenue of $128.97 million, slightly missing estimates and marking an 11.62% YoY decline. Revenue pressures highlight macroeconomic challenges and shifting consumer spending habits, which remain headwinds for the broader mattress and home goods industry. Despite these challenges, Purple Innovation stock recently rallied on speculation of a potential sale, presenting an upside opportunity for investors. If a buyout materializes, it could unlock shareholder value. Otherwise, the company must reignite revenue growth and improve profitability to sustain investor confidence and long-term stock performance. Investors should closely monitor the company's execution of its strategic initiatives in the coming quarters. Our review on VCIG VCI Global Limited, a Malaysia-based diversified holding company specializing in consulting, fintech, AI, robotics, and cybersecurity, has outlined its strategic expansion plan to strengthen market dominance across Asia and the Middle East. With a multi-phase roadmap, the company aims to drive growth, reinforcing its leadership in IPO advisory, AI infrastructure, and cybersecurity services while expanding market reach. For investors, the plan underscores the company's ambition to solidify its competitive position through 2025 and beyond. By focusing on high-growth sectors like AI and cybersecurity, VCI Global is aligning itself with rising global demand for digital solutions. Its expertise in IPO advisory and boardroom strategy, consultancy further strengthens its value in corporate finance and capital markets. The emphasis on Asia and the Middle East taps into regions with strong economic development and increasing digital transformation initiatives. As businesses and governments accelerate adoption of AI-driven solutions and cybersecurity frameworks, VCI Global's expansion could unlock new revenue streams and enhance shareholder value. While the company's vision is promising, investors should monitor execution risks, including regulatory challenges, competition, and integration of new ventures. The ability to secure partnerships and drive sustainable revenue growth will be critical to stock performance. If executed effectively, VCI Global's expansion strategy could enhance its market position and financial standing, making it a stock to watch for long-term gains. Our review on HCAI, Huachen AI Parking Management Technology Holding Co. Limited, a Jiaxing, China-based manufacturer specializing in smart parking solutions and equipment structural parts, has announced the full exercise of underwriters' over-allotment option in its recent initial public offering IPO. This resulted in the sale of an additional 225,000 ordinary shares at $4 per share, bringing total gross proceeds to approximately $6.9 million before deductions. For investors, this successful over-allotment exercise signals strong initial demand for Huachen AI parking stock, reinforcing confidence in its business model. The company's NASDAQ Capital Market listing under the ticker HCAI on February 5, 2025, enhances market visibility and access to capital for future expansion. The additional capital provides financial flexibility for technology advancements and market penetration. As global demand for smart parking solutions rises with urbanization and infrastructure modernization, the company is well-positioned to capitalize on these trends. While the IPO's reception bodes well for short-term stock performance, investors should monitor execution risks and regulatory considerations in the Chinese market. Huachen AI Parking's ability to scale operations and maintain profitability will be key to sustaining long-term shareholder value. Our review on HFFG. HF Foods Group Incorporated, a leading distributor of fresh produce, frozen and dry food and non-food products to primarily Asian and Chinese restaurants across the U.S., reported strong fourth-quarter financial results, driving a positive market reaction. The company posted earnings per share of 11 cents, more than doubling from 5 cents in the same period last year, while revenue climbed 8.7% year-over-year to $305.28 million, fueled by increased wholesale volumes, product cost inflation, and improved pricing strategies. Despite revenue growth, HF Foods faced margin compression, with gross profit declining slightly to $52.2 million and gross profit margin decreasing from 18.6% to 17.1%. The company attributed this to lower margins in the meat and poultry segment and a higher mix of lower-margin wholesale business. While this presents a challenge, the company remains focused on optimizing its supplier relationships and pricing strategies to counteract these pressures. CEO Felix Lin highlighted external pressures affecting key customer segments, including policy changes and broader industry challenges, but expressed confidence in HF Foods' adaptability. The company's ability to expand into high-growth areas and leverage its flexible business model will be crucial in sustaining its competitive position. With shares reacting positively to the earnings beat, investors appear encouraged by HF Foods' revenue momentum despite ongoing margin pressures. Looking ahead, the company's ability to manage cost challenges while continuing its expansion strategy will be key to long-term stock performance. Our review on AIFF. Firefly Neuroscience Incorporated, an AI-driven company focused on neuroscientific solutions for mental illnesses and neurological disorders, has announced the election of Arun Meenawat as chairman. This leadership change comes at a pivotal time as the company continues to advance its brain network analytics (BNA) platform, an FDA-cleared technology leveraging AI and EEG data to enhance brain health diagnostics. Meenawat brings extensive experience in healthcare technology and leadership, which could strengthen Firefly Neuroscience's strategic direction and market positioning. His expertise is expected to drive the company's growth initiatives, particularly in expanding the adoption of its BNA platform for conditions such as depression, dementia, and ADHD. For investors, this leadership appointment signals a commitment to scaling operations and fostering innovation in AI-driven neurological diagnostics. With an increasing emphasis on objective, data-driven approaches in mental health treatment, Firefly Neuroscience is well-positioned to capitalize on growing demand in the sector. As the company moves forward under Meenawat's leadership, investors should monitor potential business developments, partnerships, and regulatory progress that may influence long-term stock performance. Please subscribe, give the video a like, and watch more from our playlist. Thanks!